Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and trading hours, and more importantly, the election day. Big day for us U.S. Americans here, and going to be interesting to see how this plays into the market throughout the rest of this week. We might know by tonight, and we'll have maybe some interesting news and results by tomorrow morning, market-wise. Market is moving higher, which is typical of an election day. But again, what are we going to see after we get the results and the ballots are in? So with that, I'll quickly cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's the main point to take away. Other than that, Mr. Rob Roy, you out there?
I'm here, Zach. Happy election day to you. It's finally here. Gosh, we've been waiting a long time, and happy to get the election out of the way and stop hearing the incessant ads that we have to live through with that. But I'm kind of hopeful of your comment that maybe we'll know tonight. I think that's what everybody wants, is that regardless of who wins, we'd like it to be clean, decisive, and over with, and then we can start to move forward. That's from a market standpoint. Everybody has their own personal views, so we don't talk politics along those kind of lines, just simply how the market is going to react. And as you mentioned, the last 4 election days have been up days in the market. We have an up day today. So let's take a look at the chart and see where we are. You can see from the moving averages that we are trying to break above that 10-day moving average. We'll see if we're able to come up and close this gap where we gap down out of the diagonal pattern. And I suppose you could make an argument of, well, if we do move back up and we get within this and we move higher after the election, I tend to think that there's a good possibility that we get a bounce higher as soon as the election's over. But I've been saying I think it'll be short-lived. I think it's just a relief that the election is over. And then I feel like there's likely a correction coming after that. Nothing significant, but just a bit of a correction. You could make a case, I suppose, of we're still in a pattern of higher lows, and we're adding another zigzag here. And could extend this diagonal to where it does make it up to that somewhere around 590 to 600 level that we've been talking about since back in the middle of October, about the potential of this ending diagonal. But for now, that wave 5 tap box held, and the pattern is relabeled. So the pattern is like we're done with that wave 5, and we're going through a corrective phase now. And so that's what the Elliott wave algorithm is saying. But we'll see if we do get a little bit more of a relief rally than what we possibly talked about, and then the possibility of having to redraw those diagonal lines. It's not out of the question, but for me, if we continue this rally up, what happens once we fill the gap? To me, that's going to tell the tale. And if we do have a result tonight, and the market has an extra added part of relief to that, and move up into this area, we'll see if it has any sort of legs to continue. So it is pretty interesting with where things are, and we've got to fill the gap first. So that's step number 1. I guess maybe you could call that step number 2. Step number 1 was we needed to hold the 50-day moving average, which we did. And now we're back above the 10-day moving average. So before we can start talking about a corrective phase, we have to get below that 50-day moving average. So good. So good for now. We'll see. So far, so good. I was trying to say for now. All right. So let's take a look at the dollar, which has been quite interesting. We'll look at the VIX as well. Little tick back to the upside here. A little bit of a rollover. I've already talked about how this was a pretty surprising move, a little bit out of character for the dollar to go that vertically that long. But now we're correcting just a bit and trading under the 10-day moving average. And I think that the dollar is probably going to move with rates. Let's look at the TLT with what happens with the election tonight certainly could determine the future of rate cuts, depending on fiscal policies from whatever party is elected. So, look, I think it's pretty appropriate that right now we've got a doji on the TLT, the 20-year. So, just sitting right there, waiting to see what happens. So, we came down, we completed the zigzag. As a reminder, when you have a B wave right at the 38.2% corrective level, you come down 61.8. It's done that. And we've just been going sideways exactly at that level. So at least that's a little bit of a positive as far as not continuing to go lower in prices and therefore higher in yields, as you probably have heard several times if you've been watching any of the recordings that we do, live shows that we do as well. There's the possibility of stagflation, which is the worst of all worlds that we don't want. So we want to see a little bit of a calm down in rates as the economy begins to weaken a little bit, and then the Federal Reserve feeling more comfortable about cutting rates further. And so we don't get that stagflation, which once again, if you're joining us and haven't heard it before, stagflation is economically widely regarded as the worst of all worlds. The market can deal with inflation, it can deal with deflation, but when you have stagflation, that means you have elevated inflation with lower economic growth. So that handcuffs the Fed if they hike rates to combat the inflationary part. They're weakening the economy worse. And basically, that's what you have to do. That's what they ended up having to do in the 70s, is you just bite the bullet and do it, understanding that you're going to hurt the economy for quite some time by going through and doing that. So anyway, that's bonds. Let's take a look at the VIX. As I mentioned, you would imagine that calmed down a little bit today with the rally in the markets, and we have. We came up and hit that 22.5 level. Commented yesterday on our live shows that we were changing this range that we've been in, where it was between 15 and 20. Well, the range got moved up. The VIX said, "No, we're going to expand that range a bit up to 22.5." So we had between 15 and 22.5. In fact, I'm just going to take this line off because it's really not valid anymore. Really, the trading range was between 15 and 22.5. We're coming back down. We filled this little gap up in the VIX, but who knows what's going to happen tomorrow. Zach brought up, we'll see what happens tomorrow. And volatility, I don't think it's going to be a quiet day in the markets tomorrow. Who knows which direction we're going to go. And a lot of that's going to have to do with, I think, if we do have a result, a clear-cut result, without any sort of recounts and all that other stuff that goes when things are really tight, which we know this race is. Let's take a look at the Dow, the DIA. Little bit of a bounce today. After performing so well, this one has been a little bit confusing, other than the fact that likely that wave 5 is over. We consolidated here at 420. We broke up. Completed the wave 5. We came back down. We've been hovering around that 420 level. That also coincides with the 50-day moving average. We noted that here previously as well, that all the markets just seem to be kind of hovering in the 50-day moving average area, just waiting to see what's going to happen with the election and then after the election in the markets. But it did seem like there was a lot of portfolio rebalancing moving into the Dow, moving into a little bit of a defensive sector with the 30 largest companies tend not to perform as bad if the economy weakens. A little bit surprised to see it break, even trade below the 50-day moving average, which we hadn't done on the S&P, but we've held it, and we're back up to the 10-day moving average on the rally today. We'll see if the market can hold the rally into the close. That's going to be something that I watch, because I feel like maybe with the size of the rally right now, there could be some position squaring going in to the close before we start to get some of the results after the polls close around the country. And looking at the Qs, and you can see that we had a little bit of a bounce back to the upside today. And there's that 50-day moving average, as I mentioned, where all the markets seem to be trading. We did label a wave 4 here, which is interesting. It's green, though, so it's still active, which means that the algorithm is not convinced that that's the bottom. We could move back lower, but it could hold. So we'll have to wait and see. We are above the 10-day moving average on the Qs, and that's because rates have calmed down just a bit. And I've just been surprised that the Qs has been as strong as they have with the rates moving as high as they have. I felt like that would have been a little more difficult on the Qs, but they've hung in there really well. Now we look at the IWM, also trading right around the moving averages, bouncing off that 50-day moving average, very sensitive to rates. So the fact that getting a little bit of break in rates, I could make the exact same comments on the IWM that I just made on the Qs, that a little surprising that with rates moving up, that the IWM is held in there as well as it has. And look at this. I mean, look at this ascending triangle that we have here. It's awesome. There is going to be some sort of a significant breakout coming in the IWM. I can't tell you what direction. And just for those of you that might be newer to Elliott Wave or newer to watching, even though you look at that and say, well, it's a 5-wave pattern to the upside, it's going to break higher. It's an ascending triangle, it's going to break higher. None of those two things hold true. The fact that it's an ascending triangle doesn't mean anything other than it's a consolidating triangle. It can break either direction. Elliott himself said when you have a triangle, it takes precedent over the wave 5 pattern. So just because it's in a wave 5 pattern to the upside doesn't mean that we're going to get an upside breakout any more than the fact that it's an ascending triangle means an upside breakout. All the data, and we've done it all, made my name in triangles, etc., as you've heard me say before. Very first book written on them, and any triangle can break either direction. But it's exciting to see that triangle formation and watch and look for a breakout move. If you have a larger account and you're an options trader and you wanted to consider maybe a straddle or strangle on the IWM, I think you could set up something pretty strong there. But it's a $220 security, so it's not going to be cheap. That's the problem with it, is it would be expensive, but my goodness, is it set up really well. And you can see all the Elliott wave patterns in the past in the IWM. Yeah, looking good from just the triangle part. And you can say, but gosh, that's a good looking wave 5 pattern with the wave 4 right at the 38.2% level. And I hear you. And this may break to the upside. We may get an upside breakout. We may go right to that 61% extension level, if not higher. All that may happen. I'm just saying that it's not a guarantee because we have a wave 5 pattern to the upside and an ascending triangle that we're going to break higher. That may happen. It may not. But it's going to be fun to watch. So that's a really interesting pattern setting up. So you can see all the markets trading right around the 50-day moving average, right around the trending average. Are we going to continue with the uptrend? Or are we going to reverse and start a downtrend? The markets seem very indecisive with this election just as much as we do. Let's take a look at GLD, look at gold, and you can see that it looks like GLD is likely going to continue to the upside. We'll see if it moves higher up to that target level around 260. It's just been consolidating here. We had that little blip up, got a little ways from the 10-day moving average, came back down, and just trading right here, right around the 10-day moving average. I don't think it really matters who wins the election as far as gold or silver. I do think that there's a high likelihood that they're not done moving to the upside, that we get at least one more move higher. I wouldn't be surprised at all to see that wave 5 go up to 100% extension, get up to the upper end of that tap box. You can see that chart is not relabeled as the SPY did, so feels like that wave 5 is still underway. And then SLV, you can see that one moving to potentially higher as well. Case studies, considerations that we've done on SLV over here at TradeFinder. And by the way, you can go back and look at all the past TradeFinders and see the case study considerations. The track record's pretty darn impressive on the case study considerations that we've looked at. We've held that A-wave impulse, so that's good. If we can continue to hold there, turn and move back to the upside, then perhaps we can get an extended move higher on the SLV, as we talked about last week. Still don't think that move is done, but maybe just needs to get the election over with, and then a little more of an idea from the Federal Reserve on how aggressive the rate cuts are going to be. Whether or not, the interesting thing is if inflation comes roaring back to where it's going to damage the economy, that could be a bullish case for gold and silver. And if the Fed cuts rates, that could be a bullish case for gold and silver. So it just seems that both of those are likely to at least have one more run to the upside. And then the wave 4 labeling here on SLV, once again, green, so it's still active. The algorithm doesn't think that it's necessarily finished, but for now, it is holding that A-wave impulse, and that's the line we've drawn there. That's where it needs to hold. And we'll watch over the next couple of days. I don't know that we'll get a clear indication on the metals as far as the election results, but what I do feel like we're going to get a clear movement on is the cryptos. If we take a look, you can see we're getting a move higher today on Bitcoin. We're just right back to that 70,000 level. And there's a distinctive difference between the two parties on how they feel about cryptos and Bitcoin. So I think it's going to be pretty volatile night as the results come in, as the forecasts come in on who's going to win, et cetera. As all that plays out, I think you're going to see some pretty wild movements throughout the evening in Bitcoin and all of the other cryptos. So ticked up to 70,000, kind of holding right there. For those of you that have been watching our crypto show over on the Hub Financial channel, that's also here on YouTube. So if you haven't gone and visited that, go visit the Hub Financial channel on YouTube, subscribe there, and then you'll be notified when we have those live broadcasts or when broadcasts are posted. And the crypto show, we talk a lot about all things crypto, behind the scenes information, etc. And I think if you tend to watch what happens with cryptos tonight, you'll see what I mean as far as the potential volatility. And so the expectation is that cryptos are going to move higher, but we may have a little bit of a pullback if Harris wins first, and maybe some consolidation and then a resumption of the upward move. If Trump wins, then likely you're going to see another pretty significant move higher in crypto. So that's kind of where your potential lies on the cryptos. For me, I think it's just something to watch and see. Very difficult with the amount of volatility that there could be to make a call one way or the other. So let's take a look at Ethereum, just trading right here in this 2,500 area. It looked like we were building a pretty nice ascending triangle here. And the question becomes, we got close enough to where this could be the breakdown. It's not a real significant breakdown, though. In fact, we're trading back up today along with Bitcoin. Doesn't feel like a normal breakout occurs, but it was an awfully good ascending triangle pattern for it not to be. And it's broken the lows here from the end of October. So as I was able to draw the potential diagonal line on the SPY, you can't really do that here on Ethereum. You're just making stuff up now. That's where the line is, and the potential for it to break higher is based on just any sort of a ascending triangle breakout. This could be, however, a false breakout, and I think that's one possibility. But my point is that you can't redraw. You can't say it's just forming a larger triangle. It's either a false breakout or we will confirm the breakout later on this evening to the downside. And then SOL, Solana, that everybody's been talking about recently, seems to be the favored for the meme crowd and all, is holding the 50-day moving average, also trading back to the upside. And all this stuff that we talk about in the crypto world is all bound to change tonight, depending on what happens in the election. So let's look at natural gas. And we talked about this as a potential. It was actually not an idea. It was a post that we put on the TradeFinder page here on the platform. Zach will be back later on to show you how to post an idea, as we'll have one for tonight as well. But you can post an idea, you can make a post, and he'll explain the difference for you. And with natural gas, looking here at the 12.5 level, it just doesn't want to give an entry. It looks like it was going to break to the upside. We came back down. We do have a qualified zigzag to the downside, but the Elliott wave pattern relabeled, it's gone. But the zigzag pattern is still qualified, so we still could go down, maybe not as far down, because the Elliott wave pattern had us going down potentially to 10 was the middle of the tap box. That's gone. And if we do break 12.5, then you would look at 11 is possibly the low. But then look, the fact that we only have a 38.2% B wave correction, 61.8 is where it's supposed to go. Look where we went. We touched the 61.8% fib extension spot on. So technically, this zigzag is done. Now, it has bounced back up to the previous fib level, which, if you've been watching, you know that's zigzag rules for an extended C wave. So if UNG does want to break 12.5 and come down to the extended C wave, it's done what it needs to do, which is test the previous fib level. However, if the fact that this is finished and the zigzag is over with, you'd be bouncing back higher as well. So how do we know which one of those is correct? Well, for me, I think it matters on whether or not we can get back above the 10-day moving average. If we can get back above the 10-day moving average, then I think then that zigzag is fully complete, and we should retrace back to the B wave. So when a zigzag finishes, what normally happens is you retrace the entire C wave, so you go back to where the B is labeled. But we don't know that yet, because if we do break down below the 12.5 level, we could have this extended C wave. So once again, UNG is making us just hang on there and wait and see where things may go. USO on oil, we're getting a little bit of a bid, moving back into the triangle, but as I mentioned before, it doesn't count. You can't do that. It was either a false breakout, and then we actually have a big move to the upside. OPEC finally came out. I've been talking about this for so long, saying that there seems to be this anticipation that OPEC is going to increase production and all this kind of stuff. I always thought that was political rhetoric. Didn't put any serious thought behind that. I believe what they've been talking about for the better part of this year is that they've done the geological surveys. They know they have a limited supply in the ground, and they want to make as much money as they can while they can. That's the narrative that I believe from OPEC. I didn't believe all that other stuff. I thought it was political theater. And now they've pretty much come out and confirmed that they're not going to increase production. So it was all like, oh, just psych. We didn't really mean that. We're staying with trying to make more money. So my point is here, we could actually see oil move back up into this ascending triangle and break to the upside with this being a false breakout. This never made any sense. If you were here last week, you heard me say that. It just, the fact that the missiles that Israel fired at Iran didn't damage the supply, which is what part of the concern was, just sounded like hocus pocus for me to see this move down. And then now we're moving back up, which is what I thought was going to be likely to happen all along. Zach, this may come up in the Q&A, so I thought I would just beat everybody to it. We all know the story about SMCI, the accounting issues, all that kind of stuff that's going on. And so if we take a look at this pattern here, they do have earnings after hours. And my goodness, how is the market going to react to that? Is the market going to trust them? not good that your accounting firm resigns a couple of weeks before you're supposed to report earnings, and they've only been on the job for a year. They switched to Ernst & Young, I believe it was, and then they've resigned. So that doesn't give you a whole lot of faith in the numbers. So my dichotomy here is accounting irregularities is not something you want associated with your company's name. People tend to run for the hills and stay away from that. But on the other end, look how far down we've come on the stock, and they are making money. Now, whether or not they're overstating their earnings or not, who knows? I don't know that, but I do know that they are making money. And S&P's got a little bit of egg on their face, I think, by adding them to the S&P before all this stuff came out. But at some point in time, maybe this isn't the bottom. Maybe we go lower here, but at some point in time, they're going to get their act together. They're going to get their accounting issues straightened out, and they are, creating a good product, and they're making money. And at what price do you step in and start buying? I'm wondering if we're getting awfully close to that now, and I'd be really interested to see how the market handles this after hours. So my evening is going to be starting with the results from SMCI, and then as we start seeing the election results pour in, we talked about this as a post as well, and this was just a flyer on the fact that I thought the strike was going to end. Now that was over the last vote. It finally is over with now, so they have agreed, and we're not really getting much of a pop here. And that was just simply a post. It wasn't a full-blown idea. It was just more of a thought. Kind of curious to see if we do get a break. Thought we might at least come up here and test 160, if not break above it. We didn't do that. We did come up and test the 50-day moving average. That was on the open. But as you can see, we're now trading near the low of the day on Boeing. So didn't get really that much of a pop. It seemed as though, how much more bad news could come out, and that maybe all the bad news had been digested. And then, last time I said that, then they have a big strike. So I don't want to jinx the company by saying that. But it felt like maybe there would be a little bit of a relief bounce here. And it hasn't really played out that way. So the idea on, or the post on Boeing was a break at least to 160, if not higher, and it didn't really play out that way. So wanted to take a look. The case study consideration for tonight is going to be on FXI. That's what we're going to use as our idea. But before we do that, let's take a look at what's going on a little bit around the world with the other markets. And as you can imagine, they're probably kind of just all watching to see what's going to happen here as well. So we have the EWA bouncing back to the upside, back up to the 50-day moving average. And if gold and silver do take off after the election, I think you're going to see another leg higher on the EWA. But we're waiting for a new pattern. So as I mentioned before, where the wave C oftentimes gets retraced, you can see that there's the A. The B was just under the 38.2% level. So you look for a 61.8% extension. That's exactly where it went. That's why we talk about this stuff all the time, because it works. And then that finished, and we went into a zigzag here, right back, retracing the previous C wave. All the stuff that I just talked about, just all played out just as spot on as it possibly could based on the rules and guidelines of Elliott wave and corrective patterns with the zigzags, etc. So now what? Well, all that stuff is done. The zigzag was done. The retracement of the C wave is done. Now you wait and let a new pattern form. So this is that area within Elliott wave where it has to do the Missouri thing. Show me. So it's going to tell us what the next pattern will be. So you wait and see. So no idea where the EWA goes from here, since it has completed those past two patterns. And then we'll look at Canada. I would imagine that Canada is probably status quo with the U.S., which they are, bouncing to the upside along with us, held the 50-day moving average. breaking above the 10-day moving average. Going to be real interesting to see, depending on how our markets react following the election, how Canada reacts, if it stays more in lockstep with the U.S., which is normally how things go. I was mentioning this to our subscribers yesterday at Evo Trader Live, subscribers at evotrader.com, that when you have correlations, the correlations exist until they don't. Normally, the EWC moves in similar fashion to the U.S. markets, but then we had moved into a correlation where the EWC was moving in lockstep with the EWA. Now that correlation has been broken, so you wonder if, okay, is it going to move back more in tune with what happens in the U.S., which is what I think would happen, but the market doesn't care what I think. It's going to do what it's going to do. We'll see how that plays out. And then across the pond, as we look at Germany to see, trying to get a cue from where things may go here. Certainly not the same size economy over there, but they are a little bit further ahead of us in cutting rates, and that's where the curiosity comes in. Once again, right here, B wave at the 38.2% level, got just above 61.8, and then we move back down. Now, we are bouncing today. It looked like we were breaking below the 50-day moving average, and we were in the process of coming down here, retracing that C wave back to the B wave, just what we've been talking about. But now it's perhaps going to maybe give one more move higher. We'll see. Or maybe this is just a little bit of blip higher in concert with the U.S., but it is trying to hold that A-wave impulse high, which is what it needs to if it wants to bounce and have an extended C wave and go to that next level. So it's completed the test of the previous fib level. It could still happen. So Germany is kind of in limbo here. Right when it broke below there, no follow through day, right back up here. But we'll see. It's going to have to get up here and break above the 61.8% level. I wouldn't be getting too excited about going long the EWG right now, not until we see a move higher from there. But I do want to also show FXI. I know there's been a lot of banter. There's been a lot of communications on the U.S. market update on YouTube as well, because I kind of made this comment on the U.S. market update that this could be a place to look. And China, depending on what happens with the elections here, you can kind of diversify a bit overseas. We had that big wave 3 move to the upside, got too far away from the 10-day moving average, moved too vertical, all the things that I don't like that you've heard me talk about. So we came back down. What goes vertically up, oftentimes comes vertically back down. And that's exactly what happened here. And then we've consolidated this a bit. Had a 55% corrective move, so somewhere between the 50 and 61.8% levels. We've held there. We're starting to break back above the 10-day moving average. So this is going to be an idea, Zach, even though the AI has not confirmed this. This is just going back to my own personal stuff, which still worked out pretty well before the AI came in and made it that much better. So we're going to still use this as an idea that we could have a bit of a bid back into China and continue to the upside. And if we break below this area of support, this is going to be where the stop would be, right through there, especially with the wave 4, right where it is between the 50 and 61.8% levels. So you break below 31 here, then that would be your stop. So that's going to be the case study consideration. And Zach will be back in a minute to show you how to post that. But for now, Zach, take a few questions if we have any, or we'll get everybody back to eagerly awaiting the election results.
Yes, absolutely, as you and I both are as well. We'll start out with a couple questions here from Irv85. First one's going to be on Meta.
Oh, yeah, goodness. It's going to be interesting. I think it's going to depend on who wins to see what happens with Meta. We had this move. We thought, we talked about this back at the end of September, that getting this close, likely to go up to 600. The stocks just tend to be drawn to those, the big round number, the tractor beam effect, old Star Trek stuff. All that played out. It went right to 600, came back down, tested it again, and now we've held the 50-day moving average. So just with the markets, Meta is holding here around the 50-day moving average. Elliott wouldn't like that. Wave 4, right at the 23.6% fib level. He wanted to see more of a correction to feel a bit more comfortable that the corrective move was complete. But he also admitted that 23.6 is a fib level and can act as support or resistance. So that's why the algorithm will label a wave 4 once it gets to the 23.6% level. But he felt more comfortable. That's where you get the difference between rules and guidelines within Elliott Wave on a little bit more of a correction. But it also happens to coincide with the 50-day moving average. So we do have a downward zigzag here and the possibility that we could go lower. Nope, we don't either. Retrace too much. So take that back. It's not a qualified zigzag. So I'll turn that back off and scratch that. We'll just have to wait and see. We're right in between a rock and a hard place, basically, with Meta. We've held the 50-day moving average, but we're bumping our head against the 10-day moving average. And I really feel like it's going to have a dependence on who wins the election as far as where it goes. I wish I could give you a better call because I know that just sounds like, quote, the politically correct answer, pun intended, today on election day. But really, we just have to wait and see. It could form that wave 4 lower before resumption to the upside, or it could take off from here. It's just not clear. And sorry, there's not a better read on that. This is kind of a wait and see.
Yep. As we've been saying, we're going to know a lot by, hopefully know a lot by tomorrow. But regardless, post-election, that's when the market will really be telling us what's kind of just in that waiting period right now. Second symbol from ERV85 is AMD.
It's a good one to look at as well. We had pretty good earnings report and then moved back to the downside. That's don't like the vertical moves, and the old adage, what goes vertically up comes vertically back down. But AMD is taking this a little bit to an extreme. Obviously, that zigzag pattern, which looked pretty good, 50% B wave correction, and we were heading up. You don't get qualified or confirmed, I should say. It was qualified. You don't get confirmed until you take out the A wave high. But just a complete reversal, heading back down. Everything tech has been hit over the last couple of days, and it got absorbed in that. So if we take a look at the possibility of whether or not it could hold here or not, we'll draw the zigzag with the retracement, and that's too far as well. So the zigzag is now disqualified based on this move lower. Happens sometimes. Fortunately, it's a small percentage of the time, but it does. And in fact, now it looks more like a possibility of a downward zigzag, and that's the one that's in play here. But if you're bullish, the positive that you have here, as you can see, we're right at the 100% extension now, and you see how it's gone sideways 3 days once we got there. So we had a pattern of dueling zigzags here, and the downward one is the one that played out and was correct. And now we have to wait and see if that's it, and we can turn and move back higher, or if we're going to move down to the 161.8% extension. Remembering what I just mentioned earlier about zigzag rules, we should move back up and test the previous fib level, which would be right around 150. So even if it's going to move lower, it doesn't have to do the test, by the way. It just does it a majority of the time. So we could still move down to the 161.8% extension without it. But most often it does retrace back to the previous fib level. So it seems likely that we could have a little bit of a bounce back up on AMD. That's also where the 10-day moving average is. So we're oversold at the moment. So a little bit of a bounce back towards 150 seems to make sense. then we'll have to wait and see if that's the end of the movement to the downside, if this zigzag is indeed complete, and we go back up and start looking to fill this gap, or if we just bounce up and roll over and head back down. So I think in the short term, a little bit of a bounce higher, then we'll have to wait and see.
Thanks, Rob. As you might imagine, there's been a lot of chatter around PLTR.
Oh, I'm sure. It's funny, somebody had asked about that, if I could show that next week on the U.S. market update, and boom, man, they just nailed it on earnings today. So huge move to the upside. I don't like these. I wish it didn't have to be like this. If you were long, you're really happy though, because when you have these big gaps up and a move like that, you get an infusion of IV into your call options. If you're trading options, doesn't really matter if you're trading stock, but if you're an options trader, then you're loving this move to the upside with the fact that it's a big gap. What I don't like about it is we jump from bouncing off of this fib level to an immediate overbought condition. But it's holding the gains, at least so far. Let's see if he can do it into the close. But a little bit of backing and filling, I think, is warranted, especially on the fact that it's doing this on election day, which is probably unfortunate for the stock, because it's going to have outlying issues from a volatility standpoint. But the way if you listen to the CEO, who's a character in his own right, it seems like they really have their act together now. I just feel like it's difficult to chase now from an option standpoint for two reasons. One, because it's so overbought, and you're paying for that extra IV. Love to see it just maybe back up a little bit, or at least go sideways, consolidate a bit. If you're wondering about, well, what about coming down and filling that gap? Maybe it could do what AMD did, where it just gives it up and comes back down. But we'll have to wait and see how the market. AMD got caught up in some other stuff, and then the poor market conditions didn't help on the move lower. Palantir it may have that too, depending on how the market reacts to what occurs tonight, whether or not we have a result, or if it's going to get dragged out. I don't think that's going to be positive for the equities markets, et cetera. So very difficult to know where it goes from here. But an ideal entry, I think, would be let it do some backing and filling a little bit here. And then, of course, you have to like the long-term story of Palantir, especially if the Fed is going to continue into a rate-cutting cycle.
Yes, indeed. And that was an interesting point there, Rob, on how the volatility might impact this stock post-election. So, yeah, maybe unfortunate or fortunate. Well, soon to find out once those results are in. Another behemoth to follow, or, well, much larger, we'll say, is NVIDIA. And this is from Eagle. See if it breaks to hold 140 today.
Yeah, it's interesting. You've probably seen the commercial on TV. Mark Chaikin, who created Chaikin Money Flow, which is this indicator here. And you can see that been a little bit of a pullback there. It looks like maybe it's trying to tick back up. But he's, of course, advertising his wares and making his case. And he says that if NVIDIA is going to continue higher, why are all these big institutions selling? And then you get a ticker on the screen showing a lot of institutions that are selling. I don't know that that's necessarily a fair characterization, because that's typical after you have a big stock split. So I think you have to put things into context. Now, maybe in the world, he ends up being right and NVIDIA is done going higher. But I've talked about this before, that institutions had a large position in NVIDIA, and then they get all this stock from the split, and it's typical that they sell some of the position off and book some of the gains, but yet maintain a position. So I think just saying, hey, these institutions are selling all these shares, why would they be doing that if NVIDIA's story wasn't over? I just feel like that's not telling the whole story. It's a normal thing that occurs following a big split with institutions to do that, and they're just booking gains. It doesn't necessarily mean they think the story's over, in my opinion. So that's where I get frustrated with all the financial stuff on TV. So many ulterior motives involved. So get off my soapbox here. We held the 30-day moving average, which I mentioned I didn't think that was really much of a support level. I look at it more for the 1030 cross. The fact that we're breaking above this area here and getting close to 140, I think is key. So this 138, 139 area, getting above the 10-day moving average. However, with all that said, I think to go long, if you were long and are out or looking to go long, again, you want to see this wave 3 taken out. You don't have to wait much longer. It's not that far away, so you wouldn't miss out on much of the move. But I think you want to see that wave 3 taken out. And then I think NVIDIA is likely off on another run. But until it does that, this is just all congestion right in through here. From where it is here up to the wave 3 top. So I don't think you want to jump the gun here. Be a little patient. Wait. If it takes out that wave 3 high, I think it's time to go long. As far as short, I don't think so. It'd be very difficult to short NVIDIA. I think it had, a bit of a pullback over here back at the end of August and September, and I think perhaps a trading range, et cetera. They're just too far out in front of everybody in the AI stuff.
All right, indeed. Zach. Next up, we're going to go with GoGo from YKY. That would be GOGO.
GoGo. Maybe we were talking about Goog and had a moment of dyslexia there, but no, not familiar with GoGo as much, but must have had a good earnings report because that's one heck of a move higher. The issue here is the wave 4 stopped right at the 61.8% level. I mean, look at that. Just bam, hit that fib level, and that was it on the high. We're trading off the high. I would have to do a little more looking into what was said on the earnings report, what they do, all that kind of stuff. This isn't internet, is it? I know there's a GoGo internet, but I don't know if that's what this company does. But going through sideways here, right at $7, and then breaking above, it's got to get above 10 to create that institutional interest from any investment companies that have growth as an investment objective. Right now, they're aggressive growth that can own it above $5. But to get the rest of the institutions involved, we got to get above 10. And so we'll wait and see if we can do that. But for now, hopefully if you were in it, you had a nice day today. Can it have some follow through? It's got a little bit of a ceiling to go through with the 61.8% level. And that gets it to 9 and above. If it can break that and disqualify this 5-wave pattern, this is probably short covering because it was in a 5-wave pattern to the downside. But it can have some real growth if it gets above 10. So it's another one that I think you just have to keep an eye on. And if you had this move today, maybe keep some tight stops and protect your gains and give it a chance to see if it can go higher, but don't let it go any lower from where it is since it's already well off the highs of the day.
Very well. Thanks, Rob. And to answer your question there, it's an American provider of in-flight broadband internet service.
That's what I thought. That's where I've seen it on airplanes. So I was wondering if that's what it was. So, okay.
You were correct. And Will made a comment saying weird that Ethereum's going nowhere compared to Bitcoin. And I thought that was interesting as well. Wanted to hear your thoughts on, or maybe expound on that a little bit.
Yeah, there's just Ethereum is going through some expenditures from what I understand. They're doing some investing in future technologies, et cetera. And so that's keeping a little bit of a lid on things. And the current momentum trade against the crypto meme crowd and all is Solana. So that's taking a little bit of fuel away, but I don't think Ethereum's going anywhere. And I think they're here to stay, and they will likely get their act together. Well, they are. I mean, they're spending money right now and technology, et cetera. And once they get past all that, I think they'll turn and resume back to the upside. I think this trading range is probably likely to move here. But with what's going on right now with the election, et cetera, Bitcoin's the top dog, and that's where all the big action is and all the commentary on the political scene, et cetera. So I think Bitcoin has kind of resumed its move higher. Ethereum not necessarily being dragged along with it, which I think was the comment, but I think it'll play catch up at some point in time. But right now, it's all eyes on Bitcoin.
Yes, indeed. The pioneer, that is. Rodney here says, do you see an ending diagonal on MSCI similar to the SPY as shown in the weekend update? Thanks for all you guys do. Much appreciated. And we appreciate the positive feedback, Rodney.
We'll take a look. This is interesting. There has been a lot of chatter about this on the financial networks yesterday. And now I just feel like that's a wave 5. I don't like it when they're one day. You know, you get these one day spikes, and it labels that. I would prefer to see it tested again, which it might. It's above the 10-day moving average, but then kind of trading down near the low today. We'll see if we can break through this 575 level and hold it. It's trying to right now. That's a key, along with staying above this wave 3 high, and it's trying to hold that as well. So we could turn and move back to the upside here. I don't necessarily see the same ending diagonal pattern here. However, with that said, with the wave 5 up right around that 61.8% level, that could be the end of the 5-wave pattern, and that would bring us back down to the previous 4, which bounced right smack off the 50-day moving average, just as perfect as you could ask for. And so 550 would be the target. And so I would watch the close today, and then, of course, the action over the next day or two. This could just be coming up. It broke it and testing it again as resistance, and then the move is down to 550. So I think that's likely more the move here than a move higher. But, all the stuff that we're talking about, we could have just such wild swings in the markets over the next couple of days. It's really hard to do much forecasting. But if I had to pick a direction here, I think the likelihood is that we're testing that. It's going to hold as resistance, and then we move back down towards 550. But we'll see.
Very well. Thanks for that insight there, Rob. We had a question come through, or a request rather, from Fred on SMCI, which I know you covered just a bit ago. So I'd encourage you to go back and view the recording that will be available very shortly after this webinar is over. And if it's all right with you, Rob, I think we might head over to the platform, and I'll show everyone how to post the idea for this week.
Sounds good.
Alrighty, so I'll transition over to the platform here. You should be able to see a jumping off point, a menu view of everything that this growing platform has to offer. We're going to go over to this light bulb idea, and that will bring us to all of the ideas from the community. And again, we're ever growing. As you can see, there's lots of interaction on both the agreeing and disagreeing side, as in you have the opportunity to go into a vote here. Let's click this one, or an idea rather. Let's click this one here from Stephen. And based off of the votes that have been in, looks like 3 agree, 1 disagree. I'm going to go ahead and add an agreement to that. And as Rob has always said, opposing opinions is what makes markets, right? There wouldn't be a transaction for a trade if everyone agreed on the same direction or position that they want to take on a specific stock. So we love to see the interaction that's continuing to grow, and encourage those to participate as much as they can and would like to. So this one's going to be an actual official idea, as Rob mentioned, versus a post that we've had in a couple previous weeks. The difference between a post and idea, essentially a post is a draft idea, as in the criteria isn't fully met in regards to wanting to make it an official idea. Once you make it an idea, it is set in stone for whatever time frame that you set it for, and it's going to be all of the real-time data and analytics that you would get as if you were paper trading with your brokerage, which is where you would have all of the same data as well, just not any risk or capital at risk. And so you can expect the same thing for an idea as paper trading, in a post as a reference or discussion board to go back to if that criteria is met and you eventually want to make an idea. So we're going to go into create an idea here. This one's going to be on FXI. So as we can see here, I'm going to search in the symbol box for FXI, come up here on this first one on the ETF from the NASDAQ. What was our target price again on that one, Rob?
FXI, we're going to say 38.
38. Got it. And the time frame?
Let's do the 3 months.
Very well. So we have these set intervals of time for you to choose. If you need something more specific, you can go down here to custom and pick the exact day that you would like to choose for that idea. And this one will be nice and pretty here very shortly after we come back and add the commentary after the webinar. But as you can see, I'm publishing the idea now, so it will be live and available for you to go in and interact. And again, we encourage all interaction, whether you agree or disagree. Obviously, since it's my idea, I don't have that option to agree or disagree with it up here, but you will have that option as you see when you click in there, and we look forward to seeing your comments and overall thoughts around it. So with that, Rob, I think I can pass back over to you and wrap up things.
Yeah, sounds good. And yeah, we've been getting a lot of positive feedback on the social media aspect of the platform with all the ideas. People are starting to get really into it and adding ideas. And as you said, Zach, opposing opinions, don't take offense. Let's be respectful if we disagree, because disagreements make the markets. There is no market if everybody feels the same way. It's always interesting, I think, if you have a thought or an idea, put it out there and see what others think. And it's also a good learning tool that way, from hearing from others that may have a differing opinion or see the same chart you're looking at in a different way. So many aspects of that, I think, are really cool for moving forward with education. All right, Zach, we are here. We're now focused on the election. We'll see what happens tonight, and gosh, we'll have a lot to talk about in next week's TradeFinder, that's for sure. So enjoy watching. Hope you've gotten out to vote, and if you haven't already, that you get out there, and then we'll see what happens tonight. So thanks for your attention during the trading day. Look forward to talking again soon. Take care, everybody.